Today, we're diving into Dubai 2026 property market. Properties are expensive, market is competitive, and flipping is a bit harder but still very doable if you know how to adjust your strategy. So, how do you need to adjust your flipping strategy to still be successful in today's market? Let's discover it together. Hi everyone, welcome back to Flipping Dubai. I'm Federica, investor, flipper and renovation expert here in Dubai. Today, we'll cover everything from market insight, how to buy and evaluate a flip, everything you need to flip successfully in 2026. Every market is different. Some are highly competitive, some are expensive, and others are more affordable. And it is crucial to understand your market to make informed decisions. Here in Dubai, we're in one of the priciest and most competitive markets, which makes flipping challenging. Capital requirements are high. You need significant upfront investment to secure a property and cover renovation costs. High property prices mean costly mistakes. Even small errors in budgeting or execution can significantly reduce profit. Most houses within the same community are very similar in layout and design. This makes flipping highly competitive because buyers can easily compare multiple options and it's harder to differentiate your property. To succeed, flipper must focus on quality finishes, thoughtful renovation, and effective staging to make the property stand out. Permitting is slow and complex. Approvals can take longer than expected, delaying your timeline. But the market is also becoming increasingly stable, which can reduce risk for flippers. After years of rapid property appreciation, Dubai's market growth has slowed. While prices remain high, the slower pace means fewer wild swings, making it less risky for flippers compared to a hyper-volatile market. You can plan renovation and budgets with more confidence, knowing the market is more predictable. If you're new to a market, partner with experienced flippers and build a strong team. A reliable team that can execute your plan efficiently is crucial, especially in expensive or competitive communities. In real estate, there's never a perfect time to both buy and sell. In a typical upmarket like we're seeing now in Dubai, houses are easy to sell because buyers are motivated, but finding a great deal to buy is much harder. There's also a big myth in real estate. The money is made on the buy. That's only partially true. Sure, buying at the right price helps, but what truly separates a seasoned flipper from a beginner is execution. The secret to flipping isn't just the deal, it's operation. It's having the right resources, the team, contractors and vendors that allow you to turn your plan into reality. The best flippers can control costs, execute efficiently and manage projects carefully. They know how to invent returns by putting the right plan on the deal, not just by buying low. So instead of focusing only on the purchase price, focus on people and system. With the right team in place, you can create value and profit even in a competitive market. As flippers, we need to identify the highest and best use of a property. This is about creating maximum profit, not just selling for the highest price. To come up with the right plan, you need the right property and the right team around you. Your first key person is your real estate advisor. A great real estate advisor, expert in flipping properties, will do more than just help you find opportunities. They advise you on the best use of the property, taking into account the local demographics, amenities, modification required, and the expected aesthetics for the area. Once you've found a property, the next step is creating a plan. You need a strong construction team that helps you understand cost, run budgets, and ensure your plan is executable. Ask yourself, what is the least amount of work I can do to create a margin? What is the middle ground? How can I make it nice without structural modification or costly upgrades? How do I create the most value by adding bedrooms, fancy amenities or square footage? Once you've answered all these questions, you can run the numbers and you need to factor in purchase price and fees, financing, holding cost, renovation costs. Then subtract the selling price. The result is your net profit, which tells you the highest annualized return achievable over a 12-month period. I would like to make a note about the annualized return. When we evaluate traditional long or short-term rentals, we usually look at the annual cash-on-cash return. But in flipping, many people only focus on the raw profit. How much cash am I getting back? Instead, it's smarter to calculate your annualized return. Looking at deals on an annual basis helps you make better decisions, independent of how long the flip will take. Flipping is fast, but you still want to think like a careful investor. For example, you invest $1 million into a flip. If you make $200,000 in 6 months, that's a 20% return, which is a 40% annualized return. This method helps you evaluate whether a deal aligns with your goals, considering both risk and timing. If a flip will take a full year, you want to ensure your return is strong enough to justify the investment. One tip: if you're new to flipping, start with smaller, low-risk returns, around 10%, until you're confident in your numbers and your ability to execute the plan successfully. In the next video, we'll cover estimating rehab costs, working with contractors, and selling strategies to maximize profit.